Let's face it, the crypto market is a sea of red right now. Prices are falling, fear is absolutely everywhere, and yeah, from the outside, it looks like total chaos. But if you look just past those frantic price charts, there's a completely different story playing out. So today, we're going to dig into that split personality, the brutal market crash, and the quiet fundamental progress that's happening right in the middle of it all.
And just to kick things off, get a load of this number, 11. 11 out of 100 on the Crypto Fear and Greed Index. That isn't just fear, you know? The official term for this is extreme fear. This is the market hitting rock bottom in terms of sentiment for the entire year, and it signals that a lot of traders are just throwing in the towel.
And this chart right here, well, this shows you exactly why that fear is so high. It feels like just yesterday, last month, Bitcoin was flying past $120,000. Today, it's fighting just to stay above $81,000. In that tiny window of time, over $800 billion in value has been wiped clean from the entire crypto market. It's a staggering drop. So how on earth did it all unravel so fast?
To really get the speed of this crash, we need to talk about this incredibly powerful force that just took over the market, a massive, massive liquidation event. It all boils down to this thing called leveraged liquidation. Now, in simple terms, think of it like this. Traders borrow money to make much bigger bets than they could normally afford. To do that, they have to put up their own crypto as collateral. But if the price drops too much, that collateral isn't worth enough anymore, and bam, the system automatically and forcibly sells it to cover the loan. And this is where it gets scary, because it creates this terrifying domino effect. A small price drop triggers the first round of forced sales. Of course, those sales push the price down even more, which then triggers the next wave of liquidations. It's this vicious downward spiral that just feeds on itself, making the crash way worse than the initial dip. And the scale of this whole cascade was just immense. In a single 24-hour period, over $2 billion worth of these leveraged positions were forcibly sold off. That is an incredible amount of selling pressure hitting the market all at once. It's really no wonder prices just plummeted. Okay, but this is where the story gets really, really interesting, because all of that chaos, all of that red you see on the charts, it doesn't actually tell the full story. While traders were panicking, a totally different group of people was hard at work. The real question is, what were the builders doing? Well, it turns out they were pretty much just ignoring all the noise. They were heads down, making fundamental progress on the technology, the regulation, and the infrastructure that this whole ecosystem is built on. And this progress is happening pretty much across the board. On the tech side, you've got massive proposals for Ethereum's future. On the regulatory front, the SEC is reportedly moving towards clearer rules, which would be a huge deal. For the big money investors, major exchanges like Coinbase are actually expanding access. And maybe the most telling thing, key projects are still raising serious money, which shows you that long-term confidence is still very much there. Let's just zoom in on that Ethereum upgrade for a second, the Beam chain. This isn't some minor tweak or a quick patch. We are talking about a complete overhaul of how the network operates at its core, something they just unveiled at the big developer conference. It's a project that's going to take years, and it's designed to solve Ethereum's biggest headaches with speed and cost. This is the definition of long-term fundamental building. So you've got this contrast, right? Short-term panic versus long-term building. And you know what? We saw that exact same split reflected in how different types of investors were acting during the crash. And this really is a classic market story. On one side, you had retail traders completely gripped by that extreme fear, selling off their positions just to cut their losses. But on the other side, reports suggest the big institutional players were doing the exact opposite. They were strategically nibbling, as they call it, basically seeing this as a discount sale and buying up assets on the cheap. I mean, you could just feel the raw emotion on social media. The whole conversation was just dominated by panic. Phrases like Bitcoin crash in real time were trending, just capturing that absolute fear of the moment. But then, right alongside all that panic, a completely different conversation was bubbling up. You had experienced investors and long-term believers calling this a generational buying opportunity. They weren't seeing an end. They were seeing a sale. And look, this isn't just talk. There's real data to back it up. We're seeing reports that major university endowments, like Harvard's, were actually adding to their crypto holdings. At the same time, huge investment products are generating millions in revenue. This is not hot money that runs away at the first sign of trouble. And all the while, major exchanges are still building out new, advanced trading products specifically for these big institutions. They're not backing down, they're doubling down. So, how are we supposed to make sense of all this? We've got this extreme fear and these massive liquidations on one side, but fundamental progress and big institutions buying on the other. Is this just a healthy shakeout, or is it something more serious? This slide really just captures those two competing stories perfectly, doesn't it? On the negative side, the signals are loud and clear. Extreme fear, billions in forced selling, prices at 7-month lows, and money flowing out of major funds. But on the positive side, the signals are quieter but powerful. Huge tech upgrades, clearer regulation coming, big money buying the dip, and key projects still getting funded. Now, we have to be realistic here. In the very short term, the market is fragile. As one analyst put it, Bitcoin is on thin ice. The risk of another leg down is very, very real. Without some fresh waves of buying, those lower price levels are definitely still in play. And that leaves us with the ultimate question. Are we just watching a violent storm that's clearing out all the excess borrowing and speculation, kind of a healthy reset for the next run? Or are these cracks in the price charts a sign of deeper, more fundamental problems? The panic is real, no doubt about it, but so is the progress. And the tension between those two forces is going to define everything that happens next.